to September 8th. Let's look at stock articles, right? Hmm. Global shares rise. What articles do we have? Global shares rise as investors watch for central bank moves. Hmm. Three solar stocks that will benefit from the Biden tariff holiday. A European Central Bank makes largest ever interest rate hike. Hmm. These two undervalued stocks are ready to rocket higher. Okay. Three high margin chip makers bound to recover. Hmm. Take advantage of the lithium crunch with these stocks. Gamestop stock just flashed a big signal. Hmm. Are hidden gems lurking among chemical and fertilizer stocks? The hidden dangers of not taking your vacation days. Hmm. Lululemon set to soar into September. Hmm. Okay, I just picked six articles and I'm gonna read that aloud. Okay, let's see. Global stocks benchmarks mostly rose Thursday as investors closely watched a European Central Bank meeting and sought to juggle concerns about inflation and recession. Mm. France's CAC 40 rose 0.1% to 6,113 in early trading, while Germany's DAX slipped nearly 0.1% to 12,904. Um, yeah, somewhat reassuring to market watchers was Japan's revised seasonally adjusted real gross domestic product. Hmm. Economic conditions in the region will continue to be in focus, with China's trade balance data yesterday revealing challenges in both external and domestic demand, said Yup Junrong, market strategist at IG in Singapore. China's trade weakened in August as high energy prices, inflation, and antivirus measures weighed on global and Chinese consumer demand. Hmm. Hmm. Global shares rise and investors watch for central bank moves. Okay. Next one, three solar stocks that will benefit from the Biden tariff holiday. Okay, let's see. Okay, solar stocks have been on fire lately. The sector is getting a boost from the Biden administration, which has announced a broad goal for 45% of the nation's energy supply to come from solar by 2050. Wow. That's up from the 4% the sector supplied in 2020. Hmm. And as one of the several steps to reach this goal, the sector got an additional catalyst in June when the Biden administration announced it was suspending tariffs on solar panel components from four countries. Think of this like a lock and a key. The lock is the 45% target goal. Suspending the tariffs is one of the keys the administration is using to help break up supply chain bottlenecks. However, the tariff news is only accelerating a trend that's been building for years. Several research firms agree that the solar market is going to grow at a compound annual growth rate of more than 20% over the next 5 years. And Fortune Business Insight estimate the global market will be worth $1 trillion at the end of 2028. An industry leader with more growth in store. Sunrun has one of the largest installed bases in the United States. The company is known for its home solar and battery storage solutions, including solar panels, racks, and solar leads. The San Francisco-based company has over 600,000 customers across 22 states. Unlike the other two stocks on this list, Sunrun shares are flat in 2022. That puts fund stock well below the current analyst expectations of $48 per share. But you can't blame that on revenue. Sunrun is posting strong sequential and year-over-year revenue growth. And with the CAGR projections for the industry, that's not likely to slow down. The issue may be more of earnings. Sunrun is still not delivering consistently positive earnings. However, in the most recent quarter, it did post a solid beat of a 70% on earnings, coming in at negative 6 cents a share, as opposed to negative 20 cents a share that was forecast. Sunrun. Huh. First Solar will be one of the solar companies to benefit the most from the Biden administration Inflation Reduction Act. Specifically, the bill provides $40 million in aid to solar manufacturers. First Solar is a U.S.-based company that already has manufacturing infrastructure up and running. The company produces solar power systems and modules and is known for its proprietary thin film module. The company produces solar power systems and modules and is known for its proprietary thin film module. This allows for better performance in low light and hot weather. Plus, the modules are larger than other modules, which helps reduce the cost per watt. First Solar plans to increase its manufacturing footprint with the help of the money it receives from the legislation, and the company is showing a strong backlog of orders through 2024. The last stock on the short list of solar stock is Sun Power Corporation. This is another American company that provides solar storage and home energy solutions. And while it does have commercial clients, it's the company appeal to residential consumers that got my attention. Residential consumers. Okay. So among this list, I'd say I want to choose Sunrun because it has one of the largest installed bases in the United States. And I just searched it on Yahoo Finance, and the articles that I see are like 10 best renewable energy stocks to buy and hold for the next 10 years. Let's read this article and see if what I'm looking for is written on this article. We discussed 10 renewable energy stocks to buy and hold for the next 10 years. If you want to jump straight to the top stocks in this group, okay. We have Sunrun here. Okay, energy prices have increased drastically due to multiple factors, such as post-pandemic demand and supply constraints emerging from the Russian-Ukraine war. The volatile energy prices will escalate the inevitable global shift to renewable energy, and several renewable energy firms are positioned to benefit in the coming years. Some of the best renewable energy stocks to buy and hold for the long term include Sunrun, FS Energy, and Plug Power. Sunrun. Okay, I get it. Sunrun. Solar energy company. In addition to sun-run, Emphasis Energy and Plug Power, Maxim Solar Technology is one of the renewable energy stocks to buy and hold for the next decade. Okay, next, European Central Bank makes largest ever interest rate hike. Okay. The European Central Bank made its largest ever interest rate increase Thursday, following the U.S. Federal Reserve and other central banks in global stampede of rapid rate hikes meant to snuff out record inflation that is squeezing consumers and pushing Europe toward recession. The bank's 25-member governing council raised its key benchmarks by an unprecedented three quarters of a percentage point for the 19 countries they use the euro currency. The ECB usually moves rates by a quarter point, had not raised its key bank lending rate by three quarters of a point since the euro's launch in 1999. Okay, here, this article says that they are raising interest rate like three times in a row, which is something that has never happened before. Uh, Bank President Christian Lagarde said the ECB will keep hiking rates over the next several meetings because inflation remains far too high and is likely to stay above our target for an extended period. She said energy prices will stay extraordinarily high. While Lagarde stopped short of predicting a recession later this year, which many economists expect, she told reporters that recent data point to a substantial slowdown in area economic growth, with the economy expected to stagnate later in the year and in the first quarter of 2023. Let's repeat this because it seems like it's an important statement. While Lagarde stopped short of predicting a recession later this year, which many economists expect, she told reporters that a recent data point to a substantial slowdown in euro area economic growth, with the economy expected to stagnate later in the year and the first quarter of 2023. The bank's jumbo increase is aimed at raising the cost of borrowing for consumers, government, and businesses, which in theory slows spending and investment and cools off soaring consumer prices by reducing the demand of goods. Hmm. Largest ever interest rate hike. It's a mega trend these days. Even Federal Reserve raised interest rate, and also Europe, along with that line, along with that movement, Europe is also raising interest rate. Uh, okay, these two undervalued stocks are ready to rocket higher. Dick's Sporting Goods set the stage for academic sports and outdoors to post a strong FQ second when it reported earnings last month. Dick's Sporting Goods set the stage for academic sports and outdoors to post a strong FQ2 when it reported earnings last month. The company reported better than expected top and bottom line results and raised the guidance. So it is really no surprise its closest competitor is doing the same. Hmm. While Dix is trading at a premium relative to academic sports and outdoors, both names offer a deep value relative to the broader market, while providing a much healthier outlook for the business. Dick's Sporting Goods trade at a low 9.75 times its earnings, while academic is trading at a lower 6.9 times valuation even after the post-release pop in share prices. The difference between the two ultimately is the scale of business and the dividend. In regard to the business, academic, sports, and outdoors is a little more than half the size of Dick's Sporting Goods, and it pays a smaller dividend. Mm, okay. Next, three high margin chip makers bound to recover. Mm. There is no doubt the semiconductors will continue to power technological innovation of the present and future. The proliferation of personal computers and smartphones and other consumer electronics are expected to keep advanced memory and processing chips in demand for years to come. Emerging technologies like autonomous vehicles and artificial intelligence are already driving the next wave of chip innovation. In the near term, however, the semiconductor industry may have to take a step backwards before resuming its growth trajectory. According to research firm Gartner, semiconductor sales was slow considerably this year following extraordinary growth in 2021, driven by work and learn from home trends. Softer demand and pricing in a recessionary environment could spill over to revenue decline in 2023. Even with the long-term outlook still bright for chip makers, the impact of inflation on consumer and enterprise spending has powered down industry share prices. After posting tremendous gains from 2019 to 2021, the Philips Semiconductor Index is down 34% year to date. And in this list, we have Taiwan Semiconductor and NVIDIA and Micron Technology. And among these, I'm going to have to look at Micron Technology because NVIDIA, I already looked at multiple times, and Semiconductor, TSM. Well, it's a Taiwan company, and I'm not really positive in terms of looking at Taiwan company. I don't know why. Anyway, Micron Technology has a 31% net profit margin over the trailing 12 months. Has delivered one of the strongest return on equity metrics in the semiconductor industry at 22%. The solid profitability metrics stand for Micron status as the nation's biggest memory chip company. It offers a range of memory solutions for PC, telecom, and industrial consumer customers at prices that create a substantial cushion above operating expenses. The memory area of the semiconductor space is known for its pricing volatility, but it is a risk that Micron has managed fairly well over the years. The stock is on sale mainly due to macro concerns. A slowdown in consumer spending is expected to reduce demand for desktop, laptop, tablet, and smartphone memory chips. Supply constraints and COVID lockdowns in China have created an even more challenging backdrop. But it is a rough patch that Micron is likely to get through in part by leaning on strength in the data center businesses. Although management is cautious about the unfavorable demand and supply dynamics it is seeing in other end markets, it recently signaled optimism about demand for its memory and storage products over the long haul. Okay, Micron Technology, Micron MU. Its ticker is MU. Its current price is 55, and it can first target estimate is 74. Take advantage of the lithium crunch with these stocks. Okay, let's read this. What is it? What is it? Okay, lithium supply has been and continues to be under pressure as a result of global demand. Supply has been and continues to be under pressure as a result of global demand, and the global energy crisis has only increased. The crunch of lithium, and the global energy crisis has only increased the crunch of lithium. Global energy crisis has only increased the crunch of lithium. Lithium supply has been and continues to be under pressure as a result of global demand. Okay, this will remain an issue for a while, and they had a Piedmont lithium stage following. Yes, we will eventually have enough, but not by that time. There's going to be a real crunch to get the material. We don't have enough in the world to turn that much lithium production in the world by 2035. So here we have this article saying we won't have enough supply of lithium by 2035. So its value will go up. right? This has meant that the number of lithium producers are witnessing record demand, which is leading in turn record revenues. The following stocks are likely to benefit from this trend as lithium producers hit record levels of sales. An average car requires around 8 to 10 kilograms of lithium, and sales are expected to hit 6 million plus in 2022. 95% of all shipments will present cars. That means demand for lithium is likely to be around 60 million kilograms for the year. Hmm. Okay, that's it. Next one, GameStop. Uh, GameStop stock just flashed the buy signal after keeping investors on their toes with multiple swings up and down in the past years. GameStop shares look ready to go up again. We'll see. And this time the compass is pointing north. It will be a welcome change of momentum for any bulls out there. They've had to sit back and watch shares drop 50% lower over the past month alone. But after last night's news, we might be looking at a trend reversal into the fall. The Texas headquartered video game store, almost as well known for its historic short squeeze, in January 2021, reported quarter second earnings after yesterday's recession. At first glance, it was a bit of a mall report, with earnings slightly better than expected and revenue slightly worse. There were more positive signs from metrics like sales attributable to collectibles, which is a segment GameStop intends to grow over the long term. Um, Bullish action. So, what was the response? Well, GameStop shares jumped more than 10% in the after hour session as Wall Street digested the report. But it wasn't because of any of these run of the mill numbers. It was a company's announcement that it has entered into a partnership with FTX that seemed to have sparked immediate demand for shares. And they were holding on to these gains in Thursday's pre-market session. Indeed, it looks like the bounce will eclipse both candles of the past 2 days at the open, which is regarded as a strong technical buying signal. Okay. Hmm. Not a single thing interests me at this point. I just picked like 7 articles, most read articles, but none of them interest me at this point. One single article interests me, which is about solar energy. By the administration will strengthen renewable energy because because of lack of supply of energy at this point. We have a higher demand for it, but at the same time, we don't because due to lack of supply of energy, um, we gotta have renewable energy or energy that can replace current energy, right? So Sunrun, the company which makes solar energy, it's going to be on list of my must buy portfolio. Okay, mortgage rates closing on 6% high since 2008. This one, inflation can be tamed without very high social cost. We are not yet at the market trough, Goldman Sachs. Stocks resume slide as rebound rally falters. Billionaire Bill Ackman says stick to high quality stocks. Here are 2 names he likes. 2 strong buy stocks Goldman Sachs predicts will surge at least 40%. Rising interest rates are good news for these 2 strong buy stocks. If you invested 1,000 in Apple 5 years ago, what would it be worth now? 2 blue chip dividend stocks yielding up to 7%. Analyst says buy. Why the Fed wants to see a strong dollar and falling stock prices? Hmm. Apple's new iPhone gets the worst reception since iPhone 6s. Get out of this distorted markets. Accent and three other energy stocks whose dividends look like they can weather tough times. Top rated solar stocks shines light on new buy point. Top rated stocks to buy under $10 with rapidly growing sales. Warren Buffett stock. What's inside Berkshire Hathaway's portfolio? UiPath stock seems uncut to fiscal year revenue forecast. Famed investor Mark movie says in dire warning, it's going to get worse from here for stocks. Okay, I just picked like 10 or more articles and I'm just going to go one by one. Okay. Mortgage rates hit their highest point since November 2008 this week, crushing homebuyer demand. It's on the same line. I mean, Korea is going through the same kind of difficulty here. The rate on the 30-year fixed mortgage jumped to 5.89% from 5.66% the week prior. According to Freddie Mac, rates have surged nearly 3/4 of a point in just 3 weeks and are now over 2.5 percentage points higher than the start of the year. Elevated borrowing costs and inventory shortages have pushed inflation struck home buyers to sidelines. Elevated borrowing costs and inventory shortages, elevated borrowing have pushed inflation struck home buyers to sidelines, while those who remain in the market are no longer rushing to make a bid, forcing sellers to reassess their pricing expectations. Mortgage rates rose again as markets continue to manage the prospect of more aggressive monetary policy. Mortgage rates rose again as markets continue to manage the prospect of more aggressive monetary policy to combat elevated inflation, Sam Cuther, Freddie Mac chief economist, said in a new statement. Home buyers wait out further home price drops. Okay. Demand for a mortgage remained at a 22-year low by the end of August, according to the Mortgage Bankers Association survey for the week ending September 2nd. As purchase and refinance activity continued to plummet, purchase activity has declined in 9 of the last 10 weeks, down 23% from the same week a year earlier. Homebuyers may be incentivized to remain on the sidelines, anticipating home price declines, contributing to a further cooling in home sales through the end of the year. Fed's how inflation can be tamed without a very high social cost. Okay, the Federal Reserve is strongly committed to controlling inflation, but there remains hope. It can be done without the very high social cost involved in prior inflation fights. Fed Chair Jerome Powell said on Thursday, referring to former Fed Chair Powell blockers battle against inflation in the early 1980s when Fed policy triggered a recession and the unemployment rate topped 10%. Powell said in a comment at the Cato Institute conference, Volcker was trying to uproot years of rising inflation expectations. Volcker followed several failed attempts to lower inflation, Powell said. My colleagues and I strongly commented to we think we can avoid the kind of very high social cost that Paul Volcker and the Fed has had to bring into play. So I don't know what that is specifically, but here he says we inflation can be tamed without impacting mm, without having high social costs. Uh, the bear market in stocks is definitely not over. Okay. Don't get too comfortable, bullish. Although the Dow Jones Industrial S&P 500 Nasdaq Composite have had rough goes of it since August as investors fret about a heavy-handed Federal Reserve. All three major stock indices remain well off the mid-June lows. Some Wall Street pros say the fact stocks still haven't retested the lows reflects optimism the U.S. will avert a recession in 2023, while the Fed is likely to engineer a soft economic landing. Okay, here are two names he likes. What is it? Real estate company, Howard Hughes Corporation. Uh, we have Lowe's. Next, we have the famous home improvement specialty Lowe's. What began as a single hardware store in North Carolina back in 1921 has evolved into one of the world's biggest home improvement retailers. In fact, it is second only to the Home Depot, both domestically and globally. At the start of the year, the company had under its umbrella 1971 home improvement and hardware stores. Lowe's touts itself as well positioned to keep taking share of the $900 billion home improvement sector. Apart from the current usual array of macro concerns, rising inflation and the possibility of a recession impacting consumers' behavior, Lowe's business has been affected by the shifting priorities of the post-pandemic era. After demand soared during the pandemic era as consumers used the stay-at-home mandates to spruce up their houses, more money is now being spent on out-of-the-home activities. As such, the near-term demand for DIY products in some segments has waned. Buy rating on Lowe's shares. Hmm. Lowe's, I know Lowe's company. Credit Technology Group. Credo is a holding company. It's a subsidiary design new semiconductor chips, produce prototypes, and outsource the production runs to larger chip foundries. This model allows Credo to focus its attention and its energies on designing the highest quality products, including high-end line cards, optical DSP chips, and active electrical cables. Pure storage. Pure Storage boasts a line of products that offer solutions to memory issues at all scales. Pure Storage. PSTG. Okay. Record inflation, hawkish Fed policy, lingering supply chain issues, and uncertainty prevailing over global macroeconomic conditions have raised investors' apprehension. Amid the ongoing volatility, Pure Storage is a stock that investors may consider adding to their portfolio to make some gains from its upside potential, especially after a strong quarterly performance. The company currently has its X rank number one. The company recently reported robust second quarter results, registering non-GAAP earnings of 32 cents per share in second quarter fiscal 2023. The upside can be attributed to a momentum in product and subscription services and revenue growth in the domestic international segments. While subscription services revenues are benefiting from the robust adoption of evergreen subscription services and synergies from the Portworx acquisition, Pure Storage has been gaining from its growing cloud of Flash Array and FlashBlade cost-effective storage array solution. The solution provides customers with higher performance capabilities and enables them to run complex cloud workloads on a single platform. A higher customer base largely and strength in commercial business bodes well. Higher customer base and strength in commercial business bodes well. The last reported quarter, the Pure Storage added more than 350 customers in the reported quarter. The company's customer base includes 56% of Fortune 500 companies. PSTG. Rising interest rates are good news for these two strong buy stocks. Hancock, Bank Holding Company, and Payoneer. Rising interest rates. From banking, we'll just slightly to fintech and look at Payoneer. This company has been in the business of online international money transfers and digital payment service since 2005, and now offers service in over 35 languages through 24 global offices to more than 5 million customers worldwide. Payoneer went public through a SPAC transaction in June of last year. In its most recent quarterly report, it's fifth as a public company. Commenting on the impact of rising rates on Payoneer, Northland 5-star analyst Michael Gordon says Payoneer's customers maintained 5 billion balances on the Payoneer platform. And as interest rates rise, this may drive higher interest rate income. Payoneer had a strong second quarter with new customer acquisitions, nice partnerships, a new customer payback period of less than 12 months, and increased adoption of higher value services, including B2B, in many high growth markets, including 50% for both volumes and revenue growth in Latin America, Southeast Asia. Unsurprisingly, growth in rates of Payoneer shares and outperform. Okay, skip. Next one. Okay, the bottom line. If you invested $1,000 in Apple 5 years ago, what would it be worth now? If you'd invested $1,000 in April and September 2017, you would have around $3,900 by September 2023. You could have had even more, nearly 4,600. If you'd sold at the stock's peak over the past 5 years, though. To invest in Apple now, you can create a brokerage account, invest in a fund, which includes Apple, or work with a financial advisor. So if you invested $1,000 in Apple 5 years ago, you would have 3,600, which is like 3 times of original price, right? Two blue chip dividend stocks yielding up to 7% as a buy. Enterprise product partners. Midstream company in the energy industry. Its business is moving product, getting the crude oil, the natural gas, and the natural gas liquids pulled out of the ground by producers from the wellheads. Gaming and leisure properties. The second stock we'll look at is real estate investment trust Reit. Okay, let's read this one. Mm. As the Invesco Solar lights up, solar energy leader Daco New Energy warms up a new buy point. Daco New Energy, fellow solar stock strong run, was featured as IBD stock of the day on Tuesday, and the TON ETF earns that owner today. Meanwhile, TQ stock is testing its 50-day moving average as it shines a spotlight on a potential breakout. Daco New Energy. Based in China, Daco New Energy is one of the leading and lowest cost manufacturers of high purity polysilicon for the global solar photovoltaic industry. Founded in 2008, the company currently has rated annual polysilicon production capacity of 70,000 metric tons. Hmm. Over the past few years, top investors have repeatedly warned Americans about a brewing bubble in the stock market and the increasing potential for a U.S. recession. And even after roughly 19% drop in the S&P 500 so far this year, some of the world's best market watchers continue to sound the alarm. In a CNBC interview on Tuesday, Mark Mobius, co-founder of Mobius Capital Partners, predicted the U.S. stock market would experience more pain this year. I still think it's going to get worse, he said. Generally speaking, the picture looks very bad. The 86-year-old economist and former Franklin Templeton axis argued that U.S. investors have yet to fully price in the Federal Reserve's interest rate hikes, which should lead to further stock market declines moving forward. Also, a lot of experts think that we'll have another recession this year and the beginning of next year. So uh, you should be concerned about it because something big can possibly come this year. So uh, instead of investing your money into the random stock, it's just better for you to just put it still and do nothing because doing nothing still you know is a better option than investing money into random uh, stock, right? So yeah, this is it for today. I did it really for only a short period of time. Okay, I'll see you guys tomorrow or the day after tomorrow. Okay. Mm.